over mainly IPTA phases of price and also open, high, low, close logic, because this is essentially how I trade. And I'll try to throw in some examples. So let's start with the phases of price. So there are 4 phases of price: expansion, um, retracements, consolidation, and reversal up here, right? So we're going to cover these individually. So let's get in over here. So this is expansion right here. This is what we want to trade. So expansion occurs after manipulation, retracement, or consolidation, right? So each one of these phases lead to expansion, right? So we will only trade after manipulation. This allows us to anticipate when price will leave each phase, because we want to trade after manipulation because we want to trade away from high resistance, right? We want to trade away from manipulation. We don't want to trade away from low resistance signatures, which is what consolidation and retracement is. So order flow will be respected in expansion. So this is the signatures of an expansion, right? We don't make deep retracements. I'm going to cover that in a minute. Our opposing candles support price, right? This is order flow. Price rejects the opposing swing points. So opposing swing points, as in a bullish order flow, we reject lows and displace through highs. Price does not create large pullbacks, right? We don't actually pull, we don't want to see price pulling back to premium discount, to be honest, especially a deep discount. That's a red flag for expansion, right? It's kind of like an invalidation. So price will disrespect opposing order flow and use it as support resistance until the objective has been met. So any sell side PD arrays, we want to displace through those and close over them and use them as support. We will only get a deep pullback after an objective has been met. When price expands after manipulation, it is heading to an objective, right? So when we actually expand away from a key level, it's heading somewhere. An objective, as in a swing point, like external range liquidity, that's what I refer to the most, and obviously internal range liquidity. Expansions will occur inside of expansion candles, obviously, right? So you have to wait for this new open. The candle must support expansion small wick, which is what we're going to talk about in a minute, okay? So in order to get expansions, we need an expansion candle logic, which we're going to go over next. Right, so expansion retracements into an objective, right? If we expand and then get retracements, we must expand again, right? Because price is not going to leave this low resistance, right? We need manipulation to then reverse, right? So this is a continuation signature, right? Retracement is an LRLR signature and a continuation signature. Price will often trade back to premium discount of a range and seek fair value gap, right? Internal to external. We do not trade back into a range with this signature, as we do not want to trade away from low resistance. We want to target low resistance. So meaning if I want to target this fair value gap, I don't actually want to trade this signature. We're going to talk about manipulation. There's 2 ways to trade back into a range. And this is not the one we want to trade, right? Where was I at? Right here. When price retraces back into a key level, we look for expansion away from the key level, right? So internal range liquidity, right? Price must manipulate, create high resistance liquidity in order for expansion to occur out of the key level. So if you ever want to trade, you know, retracement into expansion, so internal range to external range, we must manipulate, right? And we want to have that expansion candle on our side, right? Because we expand after manipulation. But again, we'll get into that later. This is what we will wait for when trading a retracement for continuation. We're going to wait for this manipulation to occur out of this key level. All right, so consolidation. If we expand into an objective and we get a consolidation signature, we must expand again. Consolidation is also a continuation signature, right? These are both continuation signatures, right? When price expands into objective and we get consolidation, price must expand again, at least into the consolidation high, right? It must at least attack this high. This is because price cannot reverse from consolidation if it takes out the opposing side first. This is AMD, right? So if price expands, consolidates, and takes out the low first, this is A and B. This is manipulation, right? And we will distribute away, right? This is the ideal way we want to trade a consolidation, right? We don't want to trade uh, inside of here, right? Because then we'd be trading away from failure swings. We don't want to do that, right? When trading consolidation, we'd rather trade A and B, right? What I just said, as we are trading away from high resistance and not low resistance. Uh, the way price leaves a consolidation is important. If you want to see continuation, you want to see displacement away from the consolidation, and whatever PD array is responsible for that displacement, you want to support price. So if we want to see expansion, consolidation, expansion, and then retracement, let's say, into this fair value gap and expansion again, we want to see displacement through this, right? This consolidation, and like a fair value gap or an order block to support price higher, right? So let's go on to reversal. All right, reversal is an expansion into a reversal points, so an objective like external, right? That's a reversal point, met with expansion away from the reversal point. So it's always expansion met with expansion. That's what it's going to look like. Often looking like a V shape or like a balanced price range, right? You're going to see expansion with a fair value gap on the sell side of the curve, expansion through that with a fair value gap, creating a balanced price range or like a V shape. That's what it's going to look like. We confirm a reversal with the CSD or inverse fair value gap. If the CSD is too far, this is when we will refer to an inverse fair value gap, right? SMT is also a reversal tool, so we want to see SMT obviously paired with our reversal point. Once the reversal is put in, we expect expansion. We always wait for manipulation. After manipulation is when order flow should be expansive and hold. This is when we expect order flow to expand away in a rather quick fashion. We want to see order flow holding. So when you trade into a reversal point and get that manipulation. So by the way, manipulation and reversal are the same thing pretty much. So when you get that reversal, right, and then we start expanding away and holding order flow, this is how you know it's a true manipulation, right? So this is an example of an inverse fair value gap, just so we know, right? So let's say the previous day expanded. I know we've all seen this, where the previous day expanded to a key level, and the next day we expand back into the range, right? Let's say the CSD is way up here. So you use an inverse fair value gap, right? And then we want to see S&T at the reversal point, right? And then once we see expansion away, right, and we get that continuation signature of, let's say, consolidation, right? This is how you know that this is most likely a reversal, right? Because we're going to get a continuation signature, right? And then we expand away, we start respecting order flow. That's how you know this is expansion met with expansion, right? So if you want to trade back into a range, by the way, it's going to look something like this, essentially, where we expand into an objective. First of all, hold on. Let me explain this again. So these two lines being an objective, right? If we're going to see a reversal, it's going to happen two ways, essentially. You're going to expand into an objective, and it's going to be met with expansion. That's the phase of price. That's the signature and price of a reversal, is expansion met with expansion. What if we don't get that when we hit this reversal point? What if we get consolidation or retracement? Well, we have to wait until price expands again into this objective, and we want to see the same signature right here. Expansion into this high and expansion away. So in this case, this would be an AMD reversal signature. This is not a continuation signature in AMD. This is a AMD continuation signature, right? Because if we expand, consolidate, and then manipulate, we know price has to expand. If price expands, consolidates, and expands here, we don't actually know if it's a reversal yet until we see this signature, right? So we have to wait for that confirmation, obviously. So yeah, it's gonna look like this, right? So if you ever want to trade, all I'm saying, if you ever want to trade back into a range, this is what we require. We require manipulation back into range, not retracement. It's essentially retracement, right? We're trading back into a range, so that's what retracements do. But we require manipulation because we want to trade expansion back into a range, not retracement, like low resistance, right? We don't want to trade away from failure swings. We want to trade away from manipulation. So hopefully that makes sense. We want to see that V-shape signature as well. So let's get into open, high, low, close logic. So if you're going to use my model, my rule, I require the first candle to hit a key level, because if you go and back in price and you look at the majority of reversals, we don't actually reverse in the same candle, right? We reverse in like 2 candles, right? I still want to use those IPTA signatures. So if the candle, right, expands into an objective, right, I want to trade reversal into expansion because I only want to trade expansion. And what is required for an expansion candle to be created, right? A small opposing run. You see the small opposing runs? Go back in the chart. You can just look real quick. What do we see? Small opposing run, expansion candle. This is an expansion into reversal into expansion. What do we have? A small opposing run, right? Sweeping the previous day's high. So this is what is required if you want to trade a reversal. When the previous candle is expansion candle, this is what is required, right? So um, this is one way we get a reversal. It's expansion into reversal. What's the other way, right? Is when we expand the next candle, we create a large opposing run away from the open. So this is an invalidation for me to trade this day as a reversal day. Why? Because it's not an expansion candle. It can't form an expansion candle because the opposing run is too far. This is when price will refer to the next day to expand, right? This is just a reversal, right? So inside of this candle, yes, we did reverse. The expansion will not occur until the next day, right? It's a lot different from this day, right? Because we expand, the reversal is a lot smaller, right? And we can expand because of the small expansion or small manipulation and opposing run here. So this is what you would need to see for continuation, right? We need that small opposing run. So anytime you're looking for a continuation, expansion day, you need this small opposing run supporting your idea. This is on all time frames, okay? Right? So let's talk about just trading in general from a key level. So like I said, I'm not going to trade the first candle that hits a key level because a lot of times the open is too far away. This does not support an expansion away from the key level. Why? Because the open is too far away, right? The wick would be way too large, and you never want to fade an expansion candle, right? Look how large. You're basically anticipating that it's going to close like this, right? So what if you enter this candle somewhere like this, right? Where it's creating the wick, but what if it closes like this? You're cooked. It's probably going to sweep below, most likely. So you just want to wait until this candle closes, and you're going to ask yourself, right? This is going to ask yourself in both of these scenarios: has a reversal already occurred inside of the first candle that hit the key level, right? So you need a CSD. We need that reversal signature, right? So oftentimes when it's an expansion candle, you're not going to have that, right? So this is when the next candle has to do that, right? We have to have that small opposing run supporting expansion away from the reversal point. But we also need a CSD inside of this candle, right? If you have this scenario where the candle that hits the key level is a reversal candle, or the second candle is, then it's already going to have you're probably already going to have that signature, right? Of reversal, and you're probably already going to have CSD inside of this candle too, right? So this is when you just look for candle 3 to open high into some already existing PD array to then expand away, right? So if we have usually a longer wick, right, then we look to trade the next candle if the reversal is already put in, right? We want to see that open low into, let's say, a CSD inside of here, and then we expand away. So what you really want when you're trading, right, is you want to have this on your side, right? Even if, let me remove this. Let's say in this scenario you're trading this, right? And let's say the reversal hasn't been put in, right? But you get the CSD. Even if the candle looks like this, I'm not saying it has to be an expansion candle for you to get in, right? All I'm saying is you need this small opposing run on your side before you enter, for there to be able, or for their what am I trying to say here? Basically, for it to be able to form an expansion candle. Sorry, I can't talk. Right? The order flow will basically act as stepping stones to build or to create this expansion candle, right? And this is when you see order flow hold. The reason why we want to trade expansion candles, because we know inside of expansion, we get order flow, that hold, right, to create the expansion candle. So yeah, so let's get into aligning expansion candles, right? Aligning expansion candle. This is real time frame alignment, right? Because when you get, let's say, a weekly candle, right, with that small opposing run for the possibility to create an expansion candle, and then you get, let's say, a Tuesday manipulation, right, where we expect Wednesday to expand away. Well, now you're aligning expansion candles, right? We already expect this candle to expand, and we already have the reversal put in for the week. We have the small opposing run for the possibility to expand. So now we have the weekly expansion candle aligned, and now the daily expansion candle aligned. Now you'd go into your intermediate time frame, your intraday time frame, to align 4-hour expansion candles. So this is what it would look like, right? If we open the day, let's say here, right, creating the wick, right, and we displace lower. Now we already have order flow aligned, right? Inside of this candle too, we already have the reversal put in. So now it's just continuation, right? This is where we expect order flow to hold, essentially. Right, so if price comes up here, creates SMT, manipulating this high or whatever, and then we get a CSD on the lower time frame, and you have this on the 4-hour, where you have that small opposing run to then create an expansion candle. Now you have all 3 time frames aligning, right? And you at least want to align a daily expansion candle with a 4-hour expansion candle. Always. You always want to have a daily expansion candle. We always want to be trading within that, and as well as a 4-hour, right? Because we're intraday traders, most of us. And then, yeah, if you want to continue, right, you want to trade, obviously with other 4-hour candles, right, for continuation. God, I really cannot talk. This is actually hard. All right, what about fading a candle, right? Let's talk about this one. If you're ever going to fade a candle, as in you want to trade a candle that's likely going to form a small body, right, because of the wick is very large, well, we need to have basically the opposing run needs to form low resistance liquidity. It's a total invalidation if it does something like this. If we make an open low manipulation and then high, I don't want to fade this at this point. If we create low resistance right from the open, we don't really create an established low of the day, then we need to manipulate. We need to hit a key level at a relevant time, so there's enough time in the day to then expand back into the open, into our drawn liquidity or whatever we want to trade, right? And the rule is you need to trade a 4-hour expansion candle. If this candle can't be an expansion candle, then we must have a 4-hour expansion candle, basically supporting the idea of expansion away from this manipulation. Okay. So let's talk about this. It's like a profile, a candle profile, essentially, when we don't really create a relevant high of the day, much like this, where we kind of trade away from the open. But what is this doing when we do this, right? It's eliminating the basically possibility for a bullish expansion candle. So when we come back to the open and then manipulates, right, this is just creating the wick of the candle. As long as it's small, what is this supporting? Expansion in or reversal into expansion, right? That's what it's supporting. Again, you want this to happen at a relevant time. This happens a lot. You're gonna see this a lot, by the way. Um, and let's say it just does this. Let's say we have something like this. So basically, the farther we expand away, the more likely it is to close a bearish candle. So this is when you want to only trade bearish models, right? So I'm just going to make something here real quick. It's going to be ugly, but. So if we come back into a range or whatever, right, at this point when it comes up here, it's going to look like a large wick, right? But it's just going to fill it out, right? It's just going to, it's probably just going to redistribute and then fill out the candle, right? It's going to close with a body still because of the way this candle is forming, essentially, is what I'm trying to say. So yeah, if it comes back, right, and we have this expansion candle aligned, basically, this is like good, right? This is more high probable now because of the way the expansion candle is forming. Sorry, I cannot talk, but let's get into some examples. Enough yapping. I'm pretty sure I covered most things here. Um, so the reason why IPTA and open, high, low, close, the way candles form, basically come together is we're going to go over these charts. So what example am I going over here? I don't think I am going over example. We can even look here, right? So we expand, and what phase of price does this look like, right? What characteristic, right? It's a consolidation, right? We're leaving failure swings. Does this look like a reversal? You're always gonna ask yourself, is price really gonna leave here? Probably not, right? We're not gonna pattern trade this CSD or whatever, right? Look at the failure swings. Price doesn't leave failure swings, right? There's no manipulation. So when we get this, when we see the signature, right, and we come and take this low outs, right? What do we expect, right? An A and B, right? Accumulation. First off, expansion, accumulation. We manipulate the low, the opposing side of the range. This is when we know a continuation must occur, right? So when the previous candle hits the low, remember I said it usually doesn't reverse in the first candle. It's going to do it in the second candle. That's what we see, right? And what do we need for a reversal into expansion? We need that small opposing run. And also, what do we have on our side? Is a small wick on the weekly time frame. So you see how the week goes open low, high, close. See how the expansion is larger than the manipulation? That's how expansion candles form. Let's do this here. So let's go on the lower time frame and see what this looks like. All right, so what phase of price do we get when we hit the low originally? What do we get? More so consolidation or retracement. It's not a reversal signature, right? So this is when we use this low as a reversal point, right? Inside of this candle, the first candle hit the key level. Do we have a reversal? No, we don't have a CSD, right? We don't have this signature either. Here's the CSD. Here's the signature. If you go on the lower time frame, let's put this bar replay real quick. This is the signature that we are looking for. Expansion met with expansion. It's always going to be this every single time. What do we also have on a 4-hour time frame? A small opposing run supporting this idea, right? What do we get? Expansion, consolidation, expansion, right? Consolidation. So we're all the way into our reversal point, right? Or objective, right? So if we want to trade back into a range, right? Because the objective for the week is essentially already met. So if you ever want to trade back into range, what do we need? Wait, where the hell are we at? I'm sorry. What do we need? That small opposing run with time frame alignment. So we get this small opposing run, much like we do over here. Now we need an hourly CSD for our time frame alignment. So let's just look at price here, right? We expand into a high. What phase of price do we get, right? Consolidation. So what do? Expand again after we take out this little low. What is the signature that we want to see? Expansion, melt expansion away. Right, so now the high of the day is a small opposing run. If we look to the left, right, small opposing run. And now it's protected by a CSD, right, by a key level. So when we expand away and we see this signature of consolidation, that is a continuation signature, right? So now we know that it's probably going to expand again, right? This candle is most likely to expand, right? So when we see price leaving the open, right, in a significant distance or whatever, when we see a consolidation again, that is what? Again, a continuation signature with an expansion candle aligned already. So it's much likely to hit this, to visit this low, right? But the thing about this is really late in the day, but we can just check this out if we want. So what do we see? Expansion, more so consolidation, leaving failure swings, and we expand into the high again. So if you look on a lower time frame, you see all these little highs. That's just low resistance, right? So we expand again and expand away. That's what we want to see. But I want to show you guys this little example I think I have marked out. Somewhere on the hourly time frame or something. Yeah, let's just look here, right? So the previous day expanded, right? So now what are we doing, right? We're consolidating between a low and a high, right? And we expand again. We create a fair value gap. That's what we want to see when we're trading away from consolidation. And then what are we getting again? More so consolidation, and we expand again. So what do we want to have on our side? A small opposing run, but also the 4 hours. So this is really a 4-hour example I want to show you guys on how price is going to wait for the next time opening to deliver that next phase of price. Right, so what does this 4-hour candle do right here? It more so just retraces, or just, comes higher up into this range. And what does it do? It forms a reversal, right? Expansion into this swing point, expansion away. So this is when it's going to wait for the next candle opening, right? Because why? It can form this small opposing run, right? So now you aligning a candle, right, with a phase, right? Because we have reversal this candle, we expect expansion this candle. We now create that small opposing run that aligns with it, and you get that expansion away, right, from this key level. What do we do at the end of this candle? We retrace, right? If we want to expand again, what is it going to wait for? The next candle opening. That's what we do. We expand, consolidate, expand into the objective, expand away, and now you see order flow holding. Why? Because it's an expansion candle. This is when order flow holds. So let's get into some more examples. So here we have a monthly chart, right? We don't actually know what this candle is going to do. We're waiting for the IPTA signature to, tell us basically. You're waiting to see, what phase of price will happen next, because that will help us anticipate what will happen next. So we're waiting for this next open, right? Because this is when we're going to get the new phase. If it's going to reverse, it's not going to reverse this candle. Why? Because look how far we're deviating from the open. It's going to reverse this candle. So let's go to the daily and see what signature price we see. So what do? We expand into this objective. We more so consolidate, and we expand again, met with expansion, right? So this is a signature of what? Reversal. And when we expand, where are we heading? Right, an objective. So this low. And you have the monthly open right here. So now what do you have aligned? A monthly expansion candle with the signature, okay? And now what do you also have if you want to go to the weekly chart? Remember I said it's not going to reverse in the first candle. This candle hits the objective. What do we need? Small opposing run, sweeping this high. What's the weekly profile? You have Monday making the opposing run up, so classic sell week, right? So does this starting to make sense, right? We have the inversion, we have the CSD, right? And then once we get into this low, when does the candle close? It closes like over here, right? So this whole month, we'd ideally want to be selling. Why? Because we're trading within an expansion candle. So whenever you see a reversal signature, right, it's more likely to work out, right? So what do we do here? We expand, we consolidate. You see this little fractal consolidation here? This little consolidation. We manipulate the high. Remember, manipulation into expansion. Why? Because these small opposing run. And then it's expansion met with expansion into an objective, this high, this fair value gap. What do we do? Consolidates. On a lower time frame, expand into the objective, expand away, so higher resistance. So now it's back to bearish. I don't care about this daily CSD. On a 4-hour, you're going to see this. What do? Retrace. Why is this retracement? We're leaving these equal lows, right? If we want to use weekly or daily profiles, sorry, weekly, we have the new open. So when is it likely to expand, right? The new open. So you see how it's waiting for opening, the new weekly open and stuff. You can even see it here, right? If we're going to reverse into expansion, where's the opening price? So you have these weekly candles are supporting these moves lower. You have a Monday, a Tuesday, and a Wednesday expansion away. And then we're just basically at the end of the week coming back into the range. When are we going to expand away? When are we going to go from retracement into expansion? The next week. So hopefully that makes sense. When are we going to go from expansion into reversal, the next monthly candle, because this is when it basically supports expansion, right? The small opposing run. That's all it's waiting for, essentially. If you want to look, if you want to think about it like that, that's really all it's waiting for. And yeah, so you can see here, we get this chain state delivery. This candle retraces into the key level. Does it reverse this candle? No, it reverses this candle, right, the next candle. So if you ever want to trade from a higher time frame key level, it's not likely to reverse the same day unless we have this small opposing run. This is not really a small opposing run necessarily. It's not terrible, but you see the difference, right? It's not small, but if this opposing run happens at a key time where we have a lot of time left in the day, it's more likely to work. So you see this profile, how it supports it, where you have consolidation pretty much here. Then you see the signature, expansion met with expansion, right? This is what we want to trade. And what's the rule? We want to trade with a 4-hour candle aligned. So let's see if we have that right. So what do we have, right? This 4-hour candle expands into the objective. If you want to trade away, what do we need? A 4-hour candle on our side, right? The 4-hour candle opens. When is it going to actually expand? When is it going to hit that next phase? The next candle opening. I'm telling you, they go hand in hand, okay? You have these equal lows on here. You have this signature, right? The CSD is relatively far. You can just use an inverse fair value gap, right? And you want to have SMT up here as well. So yeah, guys, I think I have some more examples. Hold on, let's see. I do. So let's just go over some daily phases, right? Because it's fractal, right? So over here, expansion into this low. So what do we expect? A new phase of price. What is it met with? Expansion. Then we consolidate. That is a continuation signature. So when you manipulate the lows, we expect distribution, right? So it's expansion met with expansion, which is a reversal signature. Consolidation, which is a continuation signature. And then we manipulate the low, and then we expand, right? And then what do? Consolidation, right? You manipulate the low into expansion, into reversal. Does that make sense? There's two ways price can do this, right? It can expand, consolidate, manipulate. Oh, that's a terrible drawing. It can consolidate. It can manipulate the low. Then we know price has to expand, right? Via IPTA. Now it expanded into a reversal point. If it's going to continue off of this manipulation, right? First of all, price already expanded, right? So now it's just about what phase of price are we going to get next, right? So if we get this, what is that? Reversal, right? If we want to get continuation, what do we need? Consolidation. And then what do we expect? Another expansion. If we want to continue this, right? Expansion into, or consolidation into expansion, we need a displacement away, remember? From a consolidation. And then we're going to create what? A key level. And we want to see retracement, because retracement is a continuation signature as well. So again, whenever we want to trade back into a range, what do we need? We need manipulation. So you see this big range here? We're going to trade back into a range. We need that manipulation, right? And then you're going to see on the lower time frames, it's a little messy, but it's just consolidation. Let's go on the lower time frame and see what we see. I think it's the 1 hour or the 4 hour. Yeah, 4 hour here. So you're going to see how fractal price is here. So here, we expand, right? What are we doing? Consolidating, where we have really two candles inside of this candle. We manipulate the highs and we expand into the lows, met with expansion, right? What is the signature? We need an inverse fair value gap if the CSD is too far. We need this to support price, because why? We basically need the expansion, whatever PD rate is an expand or formed from the expansion away from the reversal point. We need it to hold because that supports expansion, aka expansion met with expansion. And where do we go when we expand, right? Objective, so external, right? And then this is met with expansion into expansion again. What phase of price do we get over here when we expand into the low? It's consolidation, right? It's much different than what we see over here, right? Over here, when we expand, we get consolidation. We manipulate, so expansion with expansion. And we get the same thing over here. Expansion, month expansion. Over here we get consolidation, which is a continuation signature. So we must take out this low before we take out this high, essentially, right? Because we can't reverse. So when you expand into this low, and we see expansion away, what is this, right? This is a AMD, right? This is a reversal AMD. So it's not continuation, it's different. This is continuation, where we expand, right? Consolidate, we manipulate, right, into this fair value gap or whatever on lower time frames, and then we distribute, right? And then what are we getting here? An opposing candle, right? So let's look at this signature over here, right? This is more so consolidation as well, right? We expand. What is it met with? Expansion. What do we get after that? After taking out these lows? Consolidation, which is a continuation signature. We expand again, right? See that? Consolidation, expansion again, right? So yeah, and then we expand again into this low, which is met with expansion. Does that make sense? And we consolidate, and we expand, and retrace, blah, blah, blah. If we want to trade a reversal from this, from these opposing candles, what do we get, really? So if you really want to simplify it, you can see easily on the daily. We expand, we just consolidate, really. We manipulate, we expand again. We get a new phase of price after hitting these opposing candles. What do we get? Inside bar. So this inside bar internally to this one. That's just a consolidation signature as well. We manipulate, so expansion on lower time frames, you saw it, into expansion, right? And then let's go to lower time frames. With this daily fair value gap to the left, right? If we want to trade to it, what do we need? Manipulation, right? This is the signature that we want to trade back into a range, not retracement. This is not retracement here. We expand back into the range, and what do we get after hitting this high? Consolidation. We want to trade away from a fair value gap, a key level. We need manipulation. That's what we get, right? And then we get the continuation, right? So doesn't it make sense now? And again, what is it waiting for? The new open of the weekly candle. So we have this internal model. So you want to frame your MXM, your daily internal range to external range, with candles, with open, high, low, close, the weekly, right? This is supporting expansion away from the manipulation, but also the daily fair value gap. Am I still recording? W. So let's go over some of these phases of price, right? So over here, we expand into this low. What does it matter with expansion? What do we get? What is the phase after expansion? Right, we're always gonna ask ourselves, right? They all have signatures. What do we get? Consolidation. Why? Because we have 1, 2 candles inside barring. So see these fair swings up here? Not a reversal signature. Therefore, it's a continuation signature, pretty much. So when we manipulate into this fair value gap, which is the consolidation low, what do we get? Right? Expansion, right? So all it is, expansion, consolidation, manipulation, expansion, right? So when we retrace back into the range, we more so consolidate again, right? Between this high and this low, we're just kind of going back and forth, and we manipulate the low. What is this aligned with? A weekly expansion candle, right? Now we're getting that weekly small opposing run on what? A Tuesday with SMT, right? So if you go into lower time frames, let's see the signature that we get. Right, what do we get? Expansion, met with expansion with a CSD. So this is when we expect the rest of the week to expand, right? To form the weekly expansion candle, which is right here, right? And you see how order flow is respected. Why? Because we're inside of expansion candle trading away from manipulation, right? So when we expand, what do we target, right? We target objectives, so it's just external range, really. When we expand into an objective, what do we expect? A new phase of price. It's over and over and over. What is the phase of price that we get? Expansion, met with expansion, and then we can consolidate, which is what? A continuation signature. So meaning, if price takes out the consolidation high first, which is what we ideally want to see to trade consolidation, we need, what am I trying to say here? Let's restart. I don't even know, like I just like went brain dead. Expansion met with expansion consolidation. So this is a continuation signature. So when we get this manipulation, we want to trade away from that into the lows, right? So what do we also have? Again, a weekly profile supporting this, right? Monday, Tuesday consolidation, Wednesday midweek reversal, creating the wick. So this is what I mean by when price expands away from the weekly open and then comes back, right, at a relevant time, so Wednesday, and creates a wick which is small. This supports expansion away. This supports manipulation into expansion. And we have SMT is two, right? So now let's do a little fractal dive, right? So let's see the weekly candle. So inside of this weekly candle, what do we see? A large wick. So we want to ask ourselves, is price already aligned? Obviously, yes, right? We have a CSD, right? On a lower time frame, you're probably going to see it. What do we see? Expansion met with expansion, consolidation, expansion, consolidation, extended consolidation, where we can see on the daily, we get manipulation. What do we see again? Expansion met with expansion. It's the same shit every time. Expansion into the low, which is an objective. What do we get? A new phase of price. Consolidation. Oh my God, what is that? A continuation signature. Expansion again. It's the same shit every time. So when we want to trade, like I said, if you want to fade a candle, because look at the daily, right? Quite a large opposing run. So what do we need? What did I say? Right? Look at the low of the day. Notice how there's fair swings, right? No established real low of the day. So when we come and take this out, what do we need? A 4-hour expansion candle. So this is when you're going to wait for that candle to close. See how this candle cannot be an expansion candle? Look how far the open is. This is what I mean. Just wait for the next candle. This is when the new phase of price will begin. So what do we get? Open, high, low, close. What are we going to look for inside this candle? It's a long wick. So what do we want to look for? A reversal signature, SMT, and a CSD. So we have the SMT. Do we have a CSD? Let's go check. Yes, we have a CSD. We have the reversal signature, expansion met with expansion. You see the V shape that I'm talking about, right? The BPR, right? Fair value up here, fair value up here. We expand into this low. What phase of price do we get? Consolidation, which is what? A continuation signature. So when we get this CSD, this propulsion block, this is a very high probable entry, right? Because what are we aligning right now? The weekly expansion candle, not necessarily the daily expansion candle. Oh, I forgot to mention that if you're gonna trade a candle that is not an expansion candle, your objective or your targets need to be um, like different, right? They need to be like you can't really target past the objective that you're targeting. You can't really target here because it's not likely to do it that day, right? The next day it'll continue that expansion, right? Because it doesn't really support expansion. So it supports that small body close. So more likely when we take out this low, it's more likely to close back in the range is what I'm saying. Because again, it doesn't support expansion. So what was I going to say here? I'll say, so when everything's aligned, this is when we expect order flow to hold, right? So this is when we can use the lower time frame, right? So we have 30-minute, 1 hour, 15-minute PD rates. What about this 30-minute fair value gap, right? I can use the same logic here. We have this candle hitting the key level. What do I want to trade the next candle, right? I want to trade an open high, low close on all these candles away from the manipulation. See how we have a reversal into expansion candle? Let's go look and see what that looks like on the lower time frame. You're going to see the same signature over and over. Expansion met with expansion. So now this is aligned, right? We get consolidation, which is what? A continuation signature. What do we want to see if we want to see continuation from a consolidation? Expansion away from it, right? Creating an opposing candle, right? And then we get it again. Expansion met with expansion, consolidation, expansion, or retracement, you could say, because we're leaving failure swings. And then, yeah, we get order flow holding, right? So because we're also inside of what? A 4-hour expansion candle. So inside of 4-hour expansion candles, what do we expect? Lower time from order flow to hold, right? You see the 4-hour expansion candle. So this is what I mean when you're inside of an expansion candle. This is when order flow is more likely to hold. So that's all I have for y'all today. Hopefully this helped. This is a pretty hard video to make just because there's a lot of talking, a lot of explaining to do. I'm not very good at that. So hopefully this helped y'all. Catch y'all later.